LIC may not be a well-run insurance company, but it is the most trusted of them all. For the past 65 years, LIC has been a household name for many millions in India. LIC has filed its DRHP and is looking to raise 70,000 crores by offloading 5% stake in the company. Post-listing, it will be the second largest company in terms of market cap, only next to Reliance at 16 lakh crore. In this video, we are going to discuss 5 reasons why you should not invest in LIC IPO. Having said that, there is one important positive trigger for the company which we are going to discuss towards the end of this video. So, here we go. So before going forward, let's see how big is LIC. It's so freaking big. LIC have 27 crore policyholders in India. It owns 3.9% of total Indian equity market. It owns 19% of Indian government bonds. The AUM of LIC stands at 37 lakh crore, which is equivalent of entire mutual fund industry AUM in India. LIC is the world's 5th largest insurer in terms of gross written premium. Here are the 5 reasons why you should not invest in LIC IPO. Reason number 1. It owns a bank and an NBFC. The story dates back to 2018, where LIC has invested 4,700 crores by picking up 51% stake in debt-ridden IDBI Bank. At the same time, it also owns 45% stake in LIC Housing Finance. But here is the twist. RBI says you have to let go of housing division of IDBI Bank or LIC Housing Finance. And the deadline is March 2024. Whatever it is, in the next 3 years, it has to let go of one of the most lucrative businesses for its subsidiary. Reason number 2. Highest NPA in the industry. LIC has a gross NPA of 7.8% when compared to its peers like SBI Life, HDFC Life at 0.1%. Every insurance company has 2 accounts. One is policyholders account, second is shareholders account. The primary objective of every insurance company is to protect policyholders account even at the cost of shareholders account. LIC currently have 5,350 crores of NPA which is under policyholders account, which will be moved to shareholders account before 2023. This is going to impact the shareholders of the company. Reason number 3. Promoter stake sale and liquidity risk. The size of LIC IPO is 70,000 crores. To put the numbers in perspective, it is 3.8 times bigger than Paytm IPO and 4.6 times bigger than Coal India IPO, the 2 biggest IPOs in India till date. Any IPO of such magnitude will suck out liquidity from the markets, and this is not just a one-time event for the company. Remember, Government of India is only selling 5% stake in the company, and it has to eventually sell another 20% in the next 3 years, meaning we are going to see an additional supply of 2.5 lakh crore to 3 lakh crore worth of shares in the market in the next 3 years. This is huge risk. Reason number 4. LIC is losing its market share to private players. Many PSUs have lost their dominance to private players in the sectors like telecom, banking, airlines, etc. Insurance is no different. In the last 20 years, LIC has lost their market share from literally 100% in early 2000 to 64% in 2021 in terms of total insurance premium. We see this trend to continue in the future as well. Reason number 5. Employee union and work stoppages. This is more of a qualitative aspect than quantitative. LIC has little over 1 lakh employees, and most of them are part of unions that are not recognized by LIC. LIC has to face frequent strikes and demands from the employees in the form of salary increase, bonuses, ex gratia payments, etc. You may think this isn't a big issue. In the last 3 years, the union went on strike 5 times, and more importantly, 4 out of 5 times they demanded not to list LIC. This is going to impact the operating efficiency of the company. Having said all these reasons, let's look at one important positive trigger for the shareholders of the company. From September 2021, the profit distribution of non-participating fund has increased from 5% to 100%. This is going to increase the profits from 3,000 crore to 60,000 crore. This is going to be a huge booster for the shareholders of the company. So, should you subscribe to the IPO? The retail quota is at 35%, which increases the chances of your allotment. But given the massive size of the IPO, the probability of listing gain is at its minimal. Given the market conditions and the reasons mentioned above, we suggest not subscribing to the IPO. But if you are a long-term investor, you have ample amount of time, not quarters but years, to build position in this company. Read the complete analysis on our website capitalmind.in. The link is in the description below. If you like this video, please hit subscribe. Thank you.